Good evening, BB Nation. My name is Ryan. Welcome to the channel. It's Semiconductor Thursday. I'm pretty pumped up right now. One of my favorite companies reported earnings after the bell yesterday, being ARM Holdings. Now, ARM Holdings was involved with a little bit of a conundrum when it comes to Qualcomm, which also reported earnings after the bell yesterday. When it came to their licensing deal, they're actually going to court next month in December to resolve some of these issues. I know both of these companies definitely don't want to go to court, especially ARM, because I don't know if you remember or not, but Qualcomm is one of the few, actually maybe the only company to beat Apple in a licensing deal. So I know ARM doesn't want to go up against those good attorneys, right? They have a good reputation for winning cases. But that being said, ARM did gap down this morning. We're going to take a look both at that chart and Qualcomm going forward, see if there's any opportunities there. But tonight, I'm going to go out on a whim because I'm recording this before the interest rate decision, but I'm going to say we cut by a quarter point. I may have to edit this out, who knows, but I'm thinking a quarter point cut. So that being said, and with the enthusiasm in the market right now, my risk for appetite is going to be a little higher. So if you're itching to buy stocks and you still have faith in the semiconductor space, well, tonight I do have 10 stocks. That's right, 10 stocks for you. Now, most of these stocks, I'd say probably all of them, you probably never heard before because they're all low cap, low dollar stocks, a lot of them being penny stocks. Therefore, with the optimism in the market right now, let's see if these high flyers can make us any money. But first, we're going to break down ARM and Qualcomm. Now, if we take a look at ARM here over the last 3 months, obviously I like the price action, nice lower left, upper right. Today, after earnings, right, we got a gap down. I did a short on it. It was down 3%. I was kind of surprised by that. They beat both top and bottom line. Their guidance was higher than before, definitely, raised it year over year. However, didn't quite get investors enthused. The stock was down 3% this morning. However, look, the bulls taking charge right now. If I go to a one-day chart, you can see since the open, quick momentum to the upside here, but I do see a level around 152.74 that we're seeing a little bit of resistance at. You see some consolidation here. If I go to a 6-month time span, you can see several touches on this line here showing a level of resistance and support from prior price action. Again, this is around 152.68. We're nearing that right now. You can see we approached it earlier in today's trading session, a little bit of rejection there. But overall, ARM still looks like a great position. From a trading perspective, definitely, you can see the crossover, fresh crossover as of this morning with the bulls taking charge from the enthusiasm from the earnings report last night. On top of that, look, growth rate in earnings, 42%, sales growth rate, 39%, rising earnings per share. This is forecasted data again over the last 6 months. I like what I see here. Now that leads me to Qualcomm. You can see the stock in a channel here, the bottom of the channel around 157. The top of the channel, this line here, 176.26. What I find interesting here, opposite scenario, we had a gap up. However, look at price action quickly to retrace here. Let's see, a one-day price action. Yep, since the open, you can see the momentum all the way to the downside. We're currently trading at session lows right now. Not much optimism for the bulls. So if I go back out to a 6-month chart, I did put this red line here at 182.41. We're seeing some consolidation here, both a level of resistance and prior price action. So the gap up today, the open was right below this line. Price action went up first thing in the morning, touched this line at 182.41. So to get any kind of confirmation to the upside, we did get a breakout of this channel. However, we've re-entered the channel now with trading this morning. So I can't get too optimistic when it comes to Qualcomm, at least from a trader's perspective. Now, as far as an investor's perspective, I'm looking at the stock here. If I look at valuation, greatly undervalued. Value still on the rise over the last 6 months. I do like the concept of bottom fishing or buying this dip here that we're seeing with Qualcomm. But just right now, price action pretty neutral, still remaining in the channel over the last 3 months here. Therefore, I'd like to see a little bit more optimism before getting in. All right, moment of truth. These are the 10 stocks I have for you this evening. Like I said, with the interest rate decision, my appetite for risk, a little bit more, right? Now you can see a lot of these stocks definitely low priced here, price action. The highest one, $17. The lowest one, 17 cents. So I'm saying it's a pretty diverse list when it comes to price and market cap. But all of them low price stocks that have a lot of potential to the upside. And as far as the valuation of these stocks, 4 out of the 10 are undervalued. It's hard to find undervalued, penny stocks essentially, or low price stocks. But I was able to find 4 of them. Look at the price action today. All of them are up. The momentum is here. I mean, you see the top of the list here, AAOI up almost 7%, MCOR, MEKR almost 10%. So we've got some big movers on this list here. Now, if we look at RVRS fundamentals, Not there. These are low price stocks, a lot of risk when buying these positions. So you definitely want to have a plan in place in case the stock goes against you. Now, if we take a look at RV relative value, looks at long-term price appreciation compared to a AAA corporate bond. Some of these positions here do have a favorable rating above 1. You can see half the list does. As I was going through the list, I was trying to find some of the best ratings that I could when it comes to fundamentals and forecasted data. Now, when it comes to RS or relative safety, no stocks in the list have a relative safety above 1. Again, that looks at things like debt to equity, the longevity of the company, things of that nature. So none of the stocks are able to qualify. That's why I'm saying this again. These stocks have a lot of risk when trading them or investing in them. Now, if we take a look at RT relative timing, all of the stocks in the list have an RT above 1. This one just slipped back below 1 here. It was at 1, but you can see I try to aim for stocks that are trending up. If they don't have the fundamentals that we want, we're taking a lot of risk, I'd rather the stocks already be doing what we want them to do than just have a guess at it, right? So the stocks are trending up for the most part here. You see a lot of these RTs, a lot of momentum to the upside here, 1.7, 1.76 with Atom. Now VSTs, I try to get VSTs above 1. About half the list here have a favorable rating overall when it comes to value, safety, and timing. Now, our other technical indicator, the CI, which essentially just tells you if a stock likes to go up more than it goes down. I call it the Rocky Balboa indicator. You know, if a stock takes a hit, how likely is to get back up and continue to go. Now, that being said, now a couple of these stocks here, now as far as from a technical aspect, these are going to be your safer picks right here with favorable CI ratings. I put AAOI just because it has the highest, close to 1. But a lot of these stocks do show a lot of momentum to the downside. And about half the stocks have a buy rating currently, while the other half have a hold. Did not want to do any sell recommended stocks. We're already taking enough risk, right? Want to at least see some optimism when it comes to these low price semiconductor companies. As far as the forecasted data, pretty mixed bag here. You know, I try to get double digits across the board. For the most part, you can see only 2 negatives here when it comes to sales growth rate, both being MCore and Netlist here. But overall, the forecasted data strong on these companies. So let's go into the charts, break them down, and see exactly what opportunities are presenting themselves. First up, AAOI. When it comes to the forecasted data, I already like what I see. We see the growth rate in earnings, earnings per share, sales growth rate, all on the rise from where they were 12 months ago. Now, if I zoom into a 3-month time span, we can see a clear uptrend. We've got a trend line here. Why overthink it? As long as price action stays above it, I like it. Is the company investable? Yes, I do like the forecasted data. It had the highest VST on the list. We see a nice, strong buy rating across the board here. Now, I will say the company is overvalued. We see price action. Now, our valuation, we value the company at $11 right now. Now, I don't like overvalued companies, and if I do get in them, I at least want to see value on the rise, which we do see over the last few months here. So I see a lot of optimism when it comes to this company. And if I go to a 6-month chart, we can see the high came in at $20.34. So essentially, we're just buying on the dip here. We got a fresh crossover, 3 just crossed below that, above the 8, and price action remains above the 20-day EMA. Here we have a DIA. You know, a lot of consolidation over the last 6 months here. The level I had is 1204. We see this as a level of resistance. However, we finally broke above this, use it as a level of support, and then off to the races over the last 2 trading weeks. The moving averages, all in our favor. Forecasted data, all on the rise over the last 6 months. And look at the valuation here. The company is undervalued, valuation on the rise, buy rating there. This actually is a home run. I like what I see here. Therefore, again, if you have the money and you want to start out a portfolio with some smaller cap companies, a little bit more risk appetite, this I would definitely have on my list. Here we got Atom. I mean, the first red flag, look, valuation overvalued, but the valuation is flat. It's actually on the decline, right? So this is going to be a technical play. I'm not going to go off, hopes and dreams that this company is worth more than it really is, right? We see the downward trend line here. If I go back to a year, several touches on this downward trend line, pretty clear. But look, broke it, off to the races. Moving averages are in our favor, updated day. We have a prior high coming in, $4.85. If you want confirmation, obviously that would be the clear level to look at. Take it out, right? But other than that, I like what I see here. Momentum to the upside, forecasted data on the rise. Even though earnings per share is on the negative, it is on the rise, being closer to profitability. Another stock I love, the only red flag I see here, the volume, right? Not a lot of volume on this position, but price action, lower left, upper right, value on the rise. So if you have a smaller account, you don't plan on putting a lot of money in this position, hey, this might work out for you. If I take a look at the volume here, we see as of today, only 239 shares traded. If we go back to a 1-year chart, price action on the rise. Again, this is a very small company here, but look at the value. I like what I see. This actually had one of the smallest market caps in the list. So, if you're wanting to, pass a stock down, generationally, or if you're younger and time's not an issue and you got some time to let a small semiconductor company grow, this might be a company you want to consider. Here we got quick logic. Look, the stock overvalued the first 6 months, right? Valuation on the rise, stock on the decline. This is what I don't like. This is why I don't like overvalued companies, because they tend to try to meet somewhere in the middle, which probably right around here, around $11, you can see that met. However, look, different scenario now. Stock is undervalued. Value is also back on the rise here. Price action looks like it's trying to level out. If I go to a 3-month time span, we do see a higher low compared to the prior low here. So if we can knock out this high, giving us a higher swing high and a higher swing low, definition of an uptrend, right? So let's just get that confirmation. If you're a little bit more riskier, not gonna be mad at it because the market, it's showing a lot of momentum to the upside right now. We got a fresh crossover as of today. And if we take a look at the forecasted data, sales growth rate on the rise, forecasted earnings per share, sales growth rate, all in positive territory, all on the rise. I like what I see here. So essentially, you're buying a stock, low price stock here on the dip. You see the prior high of the stock was $20. Now it's trading just above $8. This stock may just be giving us a great opportunity. All right, we got MCore. This stock I actually do like. Look at this pattern here. This is a pattern that I don't like to have. Price action on the decline, value on the decline. Exactly what we don't want to see. Now, I do like the transition here. Look, we had a strong sell rating with price action, the momentum to the downside, started to break up, finally got a buy rating. And if I zoom into a 3-month time span, look, brand new buy rating as of today, full body candlestick, nice gap up here, retrace back, but did not enter the gap. If I use a horizontal line, look at that. Yep, stopped right at the gap here, level support, off to the races. All the moving averages just had a crossover 2 days ago. Value again on the rise. Forecasted data, let's take a look at it over the last year. Growth rate, 11% on the rise. Sales growth rate, -24, don't like that. And then the earnings per share, negative, but is higher than it was from 12 months ago. So fundamentally, not sold on the stock. But from a technical aspect and to see the value on the rise here, I like what I see. Again, another low volume stock. You see the shares higher than the last stock, 2,000 shares traded so far today. Got a gap up, trading at $1.23. For a stock this small to be undervalued, the value metrics here at VectorVest, stringent. And it's the same on all the companies. So to find undervalued, low price stocks, I like this. Now, as far as the price action here, I do see a 3 just crossed above the 8. As long as the price action can stay above that 20-day EMA, giving it a pretty tight stop, or if you want to loosen it, I would use the prior low, probably around $1.10. Gives you about a 10% stop here. Now, as far as forecasted data, growth rate on the rise, 26%. That's phenomenal. Sales growth rate, 7% in positive territory. Earnings per share flat at negative. On a forecasted data standpoint, I have to say it's pretty positive, not perfect. Next up, Arteris. Let me add a freehand line. Let's take a look here. Yeah, we do have the consolidation pattern here, breakout to the upside, the moving averages, momentum, all to the upside. If we take a look at the forecasted data, on the rise over the last 1 year. Love what I see here. The only concern, the stock is overvalued, which we only value the stock at 64 cents. Stock currently trading at $8.49. So right now I'm playing off that momentum, use some kind of trailing stop or some kind of stop criteria to capture existing profits. But with a fresh breakout and momentum continuing to the upside, we got a gap down if we go to 1 month. Oh, we got a gap down this morning, but however, buyers coming into control, pushing it to a new 1 month high, taking out yesterday's high. I like what I see here. The follow through has been confirmed today. When it comes to net list, obviously the stock is overvalued. Forecasted data on the rise, so I like that. Let's zoom into a 6 month time span, see what we got here. Actually, let's do a 3 month. There we go. We got a dip, fresh 1 year low. That's 52-week low on the chart. However, buying pressure coming in, fresh crossover. So right now, I'm playing the momentum solely on the moving averages here, not necessarily off the company's fundamentals. Last stock on the list, BrainChip. Now, you've probably never heard of this company, right? The stock just came out, it was in the database, less than a year ago. You can see March 6th was when it was added to the database. Price action on the decline since it was added, right? But look at the downward trend line. Nice breakout to the upside, retest of that trend line. Soon as price action, if I zoom into a 1 month time span, there's the retest right there. Buyers clearly took control. If I use a horizontal line, we can see the consolidation here over the last few trading weeks. We got a fresh moving average crossover. I like the crossover. However, I just want to see confirmation. I want to break out my level here. We'll just say 20 cents. Right now, it's just shy of 18 cents. I'm giving up the 2 cents just to get confirmation. Otherwise, you could be stuck in this channel for quite some time or get a breakout to the downside. Therefore, have some patience. Let the trade come to you. Well, VV Nation, what did you think of my 10 stocks? Really, let me know what you think. And I'd be surprised if you actually heard of them before. Let me know in the comment section if you actually own any of these positions. These are low price stocks in a hot space with exposure to AI, the semiconductor space, right? Phenomenal stocks. We covered ARM, we covered Qualcomm. The space, the market, it's great. It's trending up right now. No reason for concerns. Therefore, I just wanted to put some new stocks instead of going over the typical large cap semiconductor companies. Now, if you enjoyed tonight's video, make sure you like the content, subscribe to the channel if you're new. Welcome to the VectorVest channel again, and I will see you next week. Time to get excited. It's almost 2025. Hard to believe, right? I know. Now, VectorVest, we are proud to present our 2025 flagship 2-day investment seminar held in Tampa, Florida, January 10th and 11th. Now, you can visit that live stream. Just go to vectorvest.com/stream. I mean, there will be some great heavy hitters there presenting. We've got Glenn Tompkins, Ray Clark, along with Jerry D'Ambrosio, and special guest Les Mason.